Hey guys, welcome back to the channel. So one of the things we want to talk about is life insurance. Like, is it a good investment? Is it a smart investment? Right? Because life insurance is something, you might consider adding to, your financial plan if you're kind of interested in providing a measure of security for your loved ones, right? Those people in your life. The proceeds from a life insurance policy can be used to pay for final expenses, eliminating debts, or maybe even cover day-to-day expenses, right? Whether life insurance is a smart investment may depend on what you need and want a policy to do for you. So, then what are the types of life insurance, right? Well, when you're deciding whether life insurance is a good investment, you need to understand the types of policies you can purchase. There's different variations of life insurance plans, but generally they fall into two categories: permanent and term, right? Term life insurance is designed to cover you for a set term, hence the name. For example, you may purchase a 20-year, 30-year, 40-year term life policy. And these policies, they're going to function, similar to other types of insurance policies that you might have, right? Think car insurance, right? You pay a premium each month, and if something bad happens, in this case, your early death, there's a benefit that's going to get paid out. Permanent life insurance, on the other hand, covers you for life as long as your premiums are paid. Certain types of permanent life insurance can also have an investment component that allows policyholders to accumulate a cash value. When you hear financial advisors and, more often, life insurance agents advocating for life insurance as an investment, they're referring to the cash value component of permanent life insurance and the ways you can invest and borrow that money. Okay, what would be the pros and cons of permanent life insurance? Well, there's going to be a lot of arguments in favor of using permanent life insurance as an investment. However, many of these benefits, they're not unique to permanent life insurance. You can often get them in other ways without paying the high management expenses and agent commissions that come with permanent life insurance. We're going to go over a few of the most widely advocated benefits of permanent life insurance, right? So there's tax deferred growth, right? Permanent life insurance policies that have an investment component allow you to grow wealth on a tax deferred basis. This means you don't pay taxes on any interest, dividends, or capital gains on the cash value component of your life insurance policy until you withdraw the proceeds. This is similar to the tax benefits you get with certain retirement accounts, including IRAs, 401ks, 403bs. If you're maxing out your contribution to these accounts year after year, investing in a permanent life insurance for tax reasons might make sense. Another one is lifetime coverage, right? Because another touted benefit of permanent life insurance is that you don't lose your coverage after a set number of years. A term policy ends when you reach the end of your term, which for many policyholders is in their 60s, right? Well, while permanent policyholders, that's going to cover you for life. If you anticipate people being financially dependent on you beyond the length of a typical term policy, as an example, maybe like a disabled child or something like that, this benefit may attract you, right? Another one's going to be borrowing against the cash value. If you need money to buy a home or pay for college, you can borrow against the cash value of a permanent life insurance policy. Conversely, if you put money in a tax advantage retirement plan like a 401k and want to take it out for a purpose other than retirement, you might have to pay penalties. Further, some retirement plans like the 457B make it difficult or even impossible to take out money for such purposes. And the last pro I want to talk about is accelerated benefits. You may be able to receive anywhere from 25% to 100% of your permanent life insurance policy's death benefit before you die if you develop a specified condition such as heart attack, a stroke, invasive cancer, or end-stage renal failure. The upside of accelerated benefits, as they're called, is you can use them to pay your medical bills and possibly enjoy a better quality of life in your final months. Now, what about the cons of permanent life insurance? Because while permanent life insurance can yield several benefits, there are some potential downsides to keep in mind. Cost is one of the most important. Compared to term life insurance policies, permanent life insurance can require you to pay higher premiums. If it turns out that you don't need insurance coverage for life, you may be paying premiums unnecessarily. Permanent life insurance could also have tax implications for yourself if your beneficiaries, um, you know, decide to surrender a policy or you pass away with a loan outstanding. And taking loans or accelerated benefits could reduce the death benefit that's paid out to your beneficiaries when you pass away. Well, then what about the pros and cons of term life insurance, right? Because term life insurance could be a good investment if you don't want to leave your loved ones with the burden of paying off your debt or other expenses. Here are some of the most important benefits, of purchasing a term policy, right? The first one's going to be lower premiums, right? Term life insurance is generally less expensive to purchase compared to permanent life insurance. That's because the insurance company assumes less risk since you're only insured for a set time period. The younger and healthier you are when you buy a term life policy, the lower your premiums are likely to be. Another positive is going to be flexibility. One advantage of term life insurance is that you can choose how long you want to be covered. So if you think you'll only need life insurance for 10 or 20 years, you can choose a term that matches up with your needs. That means you have a, predictability in estimating how much you'll pay in premiums over the entire term. A permanent life policy, on the other hand, would be more of a guessing game since there's no fixed end date. Another pro is going to be convert to permanent insurance. If you decide you want to extend your term life policy indefinitely, you could convert it to, a permanent life insurance coverage, right? Doing so may increase your premiums, but it may be a worthwhile investment if you want to have coverage for life. Converting could also give you the opportunity to accumulate cash value. Well, then what about the cons of term life insurance? Because when you buy a term policy, all of your premiums goes towards, securing a death benefit for your beneficiaries. Term life insurance, unlike permanent life insurance, does not have any cash value and therefore does not have any investment component. If you're still alive when the term ends, the policy simply lapses and you and your beneficiaries don't see any money. However, you can think of term life insurance as an investment in the same sense that you are paying relatively little in premiums in exchange for the peace of mind knowing that in the event of your death, your beneficiaries will receive a relatively large death benefit. If you're interested in a policy for a fixed period with a built-in savings mechanism that rewards you for your payments later on, right, a return of premium, or ROP, life insurance policy may be an attractive option. You'll pay a flat rate for the duration of your policy, but unlike traditional term life insurance coverage, you'll get all your money back at the end of the term. So then let's look at an example. A non-smoking 30-year-old woman in excellent health might be able to get a 20-year term policy with a death benefit of $1 million for $480 a year. If this woman dies at, say, 49 years old after paying premiums for 19 years, her beneficiaries will receive $1 million tax-free, right? And that's when she paid in just like a little over $9,000, right? So term life insurance provides an incomparable return on investment should your beneficiaries ever have to use it. That being said, it provides a negative return on investment if you are among the majority of policyholders whose beneficiaries never file a claim. In that case, you will have paid a relatively low price for peace of mind, and you can celebrate the fact you're still alive. Well, then what about a permanent life insurance example? Okay, we'll say that same woman, had bought, say, permanent life insurance instead. For a whole life insurance policy from the same insurance company, she could expect to pay about $9,400 annually, right? Where the other lady paid in a little over $9,000 over 19 years. This one is almost $9,400 a year, right? So how much cash value would she build up for that extra cost? Well, after 5 years, the policy's guaranteed cash value is almost $20,000, and she will have paid about $47,000 in premiums. After 10 years, the policy's guaranteed cash value is a little over $65,000, and she would have paid about $94,000 in premium. After 20 years, the policy's guaranteed cash value is a little over $180,000, and she'll have paid about $188,000 in premiums. So, after 20 years, if she had bought term for $480 a year and invested the almost $9,000 difference, let's say an average rate of return of about 8%, she would have about a little over $420,000 before taxes. Okay, sure, you say, but the permanent life insurance policy guarantees its return. I'm not guaranteed an 8% return in the market. Sure, that's true. But even if the woman that we talked about had put the extra 9,000 a year in a savings account with 1% interest, she would have had $196,000 after 20 years, which is still more than a permanent policy's guaranteed cash value of $180,000. So, is life insurance a smart investment? Well, using permanent life insurance as an investment might make sense for certain high net worth individuals looking to minimize estate taxes, but for the average person, buying term and investing the difference is usually the better option. Even if you're purchasing life insurance primarily for investing purposes, it's still important to research the best life insurance companies to ensure you're getting the most beneficial policy possible. Right? Make sure you do your research. I say this over and over, guys. Do your research. Right? Hopefully you guys got some good information out of this video. If you liked it, go ahead and hit that thumbs up button. If you're not subscribed to the channel, go ahead and subscribe to the channel. Until I see you guys in the next video, y'all be safe.